Good morning, traders. I trust you're all well. Just got 9 a.m. on Tuesday, the 21st of July. Quick morning market recap, as always. We're now starting to see some movement, a lot more volatility kicking in. We're still heavily correlated with multiple markets across, US equity markets and others. So we are still some currency pairs are still driving on the back of the equities moving. But as majority of you have asked, just a quick recap to see where we are from our major currencies. And of course, we'll work out our cross pairs on the back of understanding the current direction. So for me, as always, we start with the dollar index. 96 is a key level for myself. And as you can see here, we're just tottering in and around this level. So in basic terms, if we see confirmed move low, I'll be happy to continue being a seller of the dollar. But my bias does lie towards being patient and waiting for a reversal. We are due a dollar rally. It is close as other reasons why we will be seeing some dollar buying in place. But as it stands at the minute, the buys are not as strong as we'd currently like to see. If price is to break 96 and you've got this 94, let's call it 94.60 to be safe. So you've got 120 odd points in play there as a possible low to target. I would expect once we meet March's low, we would then see an aggressive move higher. So if you are looking to be a seller, use March's low as your next target. But as it stands, I would rather be patient and look for a buying back above. You can see 96 has been held for quite some time. Failed breakout in here, and we come back and tested it at the mid-June. And now, as we are in July, we failed to see the double top formation. We have just taken out June's low, which is interesting. So I think just be patient and wait for that move higher on the dollar index. But again, as I said, if we do see confirmed selling and more selling, then use this area here as a potential target to then look to be a buyer back from as well. So doesn't mean we have to trade the dollar index, just means we need an idea of what the dollar is up to. Something else is pretty clear as well. If you look when we're selling in here, these are quite clean and clear sellers bars. If you look at this move here, it's a lot less. There's a lot less selling going on than what we saw in the previous clean phase one. So it does show the buyers are starting and slowly fighting back. This price action here over the last 4 days isn't pretty at all. So bear that in mind if you are looking to continue being a seller. As we drop to the smaller time frames, it does become a lot more clear. If you look at this hourly chart, this is completely messy, bad price action. This is not something that we'd like to get caught up trading in. Spikes, moves, break of cyclicities, and so on. So nothing interesting. What we would want to see is a break higher above 96, hourly pullback in here. Get your first bullish cycle of a higher high, higher low. Bullish price action to be rejecting 96, and then we'll take a clean move up back up to 97.50, which of course is our next level of or key level. Break a 97.50, we can go back up to 99. Break a 99, back up to 101. But we won't overdo it. We'll be patient and wait for price action to show us what we're going to see. Okay, guys, obviously, next up, Euro. Just shy of 115. I actually didn't think price was going to meet 115 the back end of last week, simply because we've seen such strong move in buying throughout May. Phase 2, and as you can see, this is the reason why we don't trade Phase 2, simply because it's a battle between the buyers and sellers. You can see it's a real mess in there, lots of spikes, lots of moves. And as we drop down to the hourly time frame, it's a lot more apparent as to the untidy price action that we actually see. As you can see, multiple spikes, multiple swings. Yes, you could argue there's money to be made in here, but it's lower probability trades. What we need to do is keep ourselves away from taking 50-50 trading opportunities. Of course, it lies into our game of discipline, sticking to our plan, our rules. If we're taking positions in the weakest part of trend, of course, we are going to have more losing trades than winners. So it is a skill to understand when price is moving back into phase 1 in agreement with the direction of the overall move and trend. And that is, of course, what you need to be learning, working with your coach or coming to our courses and actually understanding how to trade market structure, because it's very, very important. So since breaking our softer level of support at 1350, you can see this level is quite significant on a 4-hour time frame. It's this one in here, as you can see, multiple interactions with 1350. Since breaking higher, we have had one 4-hour trading opportunity, but for me, it's not clean. We're approaching high levels of, or strong levels of resistance. Price action's been horrible. It's been real choppy. It's been a battle of buyers and sellers. Of course, we've seen that indecision across the dollar as well, which has an impact on this market too, as well as the correlation between the equities. And the equities have been up, down constantly on coronavirus fears. Coronavirus, everything's back to normal. So risk on, risk off mode's been even more apparent than usual, which has, of course, had a knock-on effect with our FX market, causing untold indecision across the board. So we have to bear that in mind, guys. And as we say, now looking at approaching 115, that would have to be the area now to look for a potential change of direction, potential reversal. So if you are a buyer, you've got another 70 odd points. But for me personally, looking at price action, even on the 1-hour time frame, it's not clear. It's not attractive at all. When we're buying, we want to see nice clean cyclicity bouncing off our 20 moving average, using our core entry momentum based trading style to capitalize on a clean and clear trending market. So again, rather be a seller of euro at 115. So patience is required in here. Cable's an interesting one. Price did come back to test 25.20, 125.20, and as you can see on our smaller time frame, this is a nice clean, clear level that price was previously used as a level of resistance. Breakthrough retest 3 times now. This is interesting because as we see tons of buying pressure keeping price above this area of 125.20, it shows that we're failing to create lower lows. It shows that sellers are failing to take control of this market. But what we've got in here is poor cyclicity, double top formed. This was the indication that we stopped buying if we was buying in the beginning of this move here. Price then started to form poor cyclicity, lower highs in place. So we're seeing lower highs, which has bearish implications, but we're also seeing price sit on support, failing to create lower lows. So buying pressure to keep price up. So it was obvious that we needed a clean breakout of this lower high formation that was acting as a barrier. And as you can see, it's a lot clearer on the 1-hour time frame here. So price moved higher, took out a previous 1-hour high, creating a higher high in play. Took out the 4-hour high and the recent swing highs, rejecting trendline resistance. And we did see a move up higher. So again, if we're looking at next levels of support, we've got 28 being a previous high. We've also got the close of this bar at around 27.50. So anywhere in and around this area here would be potential profit taking. A break of 28 would confirm and open the doors up for a confirmed buying. I can't see this happening, but then again, 130 would be the target. So just bear that in mind, guys. We are looking for a continuation in pound. A break above 28, highly unlikely, would open up the doors to then go and target 130. Just to look at some of these cross pairs now, pound Aussie was on our list to look for a buy. Should we get a retest in here? We did see this overnight, but a strong Aussie has moved price lower. So this is now void. We won't be looking at buying pound Aussie till we see a confirmed move back higher. The reason for this is Aussie dollar is highly correlated with the equity market. We're extremely strong. As you can see, Aussie's bullish, pretty much following the same path as the S&P 500 US 30 US equity market. So guys, bear that in mind. All the time the equity market's moving higher, it's going to drag Aussie with it. That's why we're seeing an Aussie dollar push right now. We'll cover Aussie in a moment, but that's why pound Aussie has dropped lower. Pound Kiwi did pull back in and around this area of highs. Just to draw it roughly in here. Bullish price action, bullish engulfing bar did give us an opportunity to bank 66 pips. But please bear in mind that was the midnight 1 a.m. bar, so majority of us were away from the charts then, or you all should have been. Strong decline lower, 66 pip range in here. Won't be looking to be a buyer just yet. Just want to confirm that buyers are looking to step back in. We would need to see pound dollar start to threaten the move higher to give us that pound Kiwi push. Pound Swissy, yes, happy to be a buyer, but you can see there's short-term resistance in around this 1900 mark. So a break above 1900 to target 1.20 would be our next opportunity. Pound Yen has broken above 136, but not significant. So keep an eye on this 4-hour close now. If we do see a bullish 4-hour close, may open the door to short-term Pound Yen long. One thing to bear in mind, guys, I know I'm going quick, but as we are heavily overbought on the equity market, a sell-off in the equities, which is close, by the way, we are due this, could kick in yen buying safe haven buying of gold, yen, and so on. So we may see price actually turn pretty quickly. So with that being said, probably not going to be looking to be a buyer of pound yen. Pound CAD, happy to be a buyer of pound CAD, but again, it's not attractive at the minute. So if we do see a short-term break of counter trend line resistance, higher high, higher low formed in here, not pretty, but a break higher high, pullback higher low would give me another entry to buy pound CAD. Cool. All right, Aussie dollar. As I said, Aussie dollar is heavily correlated with the equity market at the minute. Just want you to use 0.70 as your mark now, guys. So a break below 0.70, which is due, by the way, would be heads on for a reversal. Continuation of buying above 70. Happy to be a buyer of Aussie, but it must be short term. Don't go looking for daily opportunities to buy Aussie with a wide stop. Short term momentum based trades. Look to get in, get out, approach a smash and grab process, because we do fall into lower probability territory at the minute for the simple reason we are so high and heavily overbought. But again, a trigger in the equity market moving lower will give us the heads up to look to short Aussie across the board as well. So bear that in mind. We did see a nice break and a reject of the 20 moving average, which is our preferred trend-based style of trading. And that's a close of the 5 a.m. bar, 6 a.m. bar took the price higher. So failed to actually get a clean 1 hour opportunity. But as we're approaching the 20 moving average, we know it's an area of indecision. We know we should be looking for that rejection point. And if you drop down to the 30-minute time frame here, we did see buyers creep back in and give us 2 opportunities to trade with the potential of making 30 points. Nice and easy on a Tuesday morning. So that's what I see from Aussie. Kiwi again, very similar. We've got 66 as our area of interest, as we say. So just bear that in mind, guys. 66 being our rejection point. A break above 66 confirms continuation of buying. But if we look at price action, look, this is what we call nice clean buying in phase 1. We're failing to see buyers take control. In fact, for the last 11 days, it's been flat. So shows lack of buying. Lack of buying should open up the doors for a change of direction, sellers to kick back in. So rather be a seller of Kiwi dollar, but a break above 66 again will open up the doors for short-term buying. But we've got to keep that in mind. Swissy, not interested in Swissy if I'm honest. I do see a rally in the dollar coming very soon. But again, not for me just yet. So for me to be a buyer of Aussie of dollar Swiss, as you can see, look at price action here. Battle of buyers and sellers, not interested at all. What I would like to see is a clean break above this area. Higher high, pullback higher low, and a rejection back up to target these 94s, 95s. So keep that in mind. But again, when price is not pretty, stay away. As it's proven over the last couple of weeks, sometimes the best trade is not to trade. So don't feel like you need to dive in and start looking for momentum-based positions when the overall market structure's inexistent. There's no trend, there's no direction. Dollar CAD looking to be a buyer of, and in fact, I am a buyer of this morning with an aggressive entry long. Again, look, as you can see here, strong phase 1 lower, price pulled back into 36.30, and since then the sellers have failed to take control. Lack of selling is taking place. We also have strong support in and around 135. So if you look here, strong phase 1 lower, push back into resistance 36.30, failed to see sellers take control. 35 is lying as a strong level of support. So all the time we're between 35, 36, I'm not interested to be a trend-based trader. Of course, safe buying comes into play when we break above 36.30, but we did see an opportunity to short on a exhaustion candle this morning. Any more aggressive traders, look at a 4-hour close above 35 and a potential buy stop above 35. So let's call it 35.20. Stop loss, let's call it the lower 35. Let's call it a 40-point stop. So potential for an aggressive entry long. Buying entry is 1.3520. Sell stop loss in and around, let's call it 134.80. 40-point stop in play. Target first target 36.30. So 100 points. So 40 pips at risk, 120-point gain. Not bad reward to risk. And then again, as we start cycling into this area here, we can take 1-hour opportunities back into 36.30. So dollar CAD does lie with multiple opportunities to trade today and over the next couple of days. So keep that in mind. I do see a move higher, especially as we're looking for a dollar rally. So I do see price moving higher here. Dollar yen, again, we keep using this 108 as our mark. Now, happy to be a buyer as above. As you know, we made money start of June buying on this breakout. Of course, and a rejection at the start of July did give nearly a 130 point move lower in dollar yen. But again, overall it's flat. It's indecisive. Now, what could be interesting here? Now, I probably won't trade dollar yen because I am looking to be a buyer of dollar on the rally. If we see this move lower in the equity market, as discussed, S&P US 30 start to drop higher, which to be honest is well overdue considering price is so high at the minute, that may trigger yen buying. So if I'm seeing dollar buying, yen buying, I expect to see this market go sideways. So then I'd look at perhaps Aussie yen short, Kiwi yen short, Euro yen short, all the cross pairs that are overbought, trading against that strong yen. So that's something to bear in mind, guys, from where we currently are. Quick recap, as always, just to look at oils now. Oil has broken above the 41 mark, which is interesting. This is probably moving in comparison to the equity market as well. So I would rather be a seller below, because for all this time we saw lack of buying taking place. Price did meet March's gap or gap high, and it has consolidated below that 200 moving average. So I'm probably not going to be a buyer, because I do see more probability making money on a move lower first, then a move higher. So I'll have a look back at oil once we see the equity market drop. Gold, again, moving bullish as well. As you guys know, I'm not typically a frequent trader of gold, but I do like to trade gold when price is moving. As we know, it moves quick. It does give us opportunities to make trend-based money, because when it moves quick. It trends well typically. So we have been in and out on an intraday basis recently, but if we see a pullback into the 20 moving average, just like we saw on the 20th of July, I may be interested in being an additional buyer. So that's where we lie, guys. Any questions, get in contact with myself or the team. But listen, have a lovely day, lovely week, and profitable trading week also. Take care, guys. Bye-bye.